What's up, guys? It's Mr. Fit to Flourish, and welcome to the Fit to Flourish podcast. It is June 2024. Today is June 19th, 2024, and it's already the second half of the year, and I wanted to talk about what stocks we should be paying attention to for the second half of the year. And as you know, I trade options. So not only is this going to be beneficial for options traders, but this is also going to be beneficial for people who trade stocks as well. So these are the stocks that you should be on watch about for the second half of the year, and also what to be looking for in terms of these moves and stocks. So this is kind of a way too early guesstimate of where these stocks are going. Starting off with number one, we're looking at SPY. SPY is going to be at 600 by end of year. Currently, it's going to be finishing out this measured move to the upside. So currently, June 19th, SPY formed this cup and handle here, and it broke out from that handle, and it's completing this measured move to the upside. This move should be completed right around 551. Okay, so this move should be completed right here around 551 to 552, and then we're going to get a retracement. So tomorrow is June 22nd, or sorry, June 20th. By the time you're watching this video, it'll be June 20th, and we should get that measured move to the upside before we retrace to the downside. And I'm thinking we're going to be making a mean reversion back to this yellow line. And I think the yellow line is going to plateau out here, and we're going to do a gap fill on SPY right here. As you can see, we're going to come up to 552. There's a gap that we created right before FOMC, and then we're going to fill that gap, is my guess. And then after that, we're going to get some type of consolidation. We may get a major correction, but essentially we're going to be moving to the upside until we get a bond or yield curve inversion, which we can talk about in another video. So that is SPY. In terms of AMD, AMD is on this downward trajectory. We're in this downward channel currently. I think we're going to come down to the 200 MA down here to 148. And then we're going to make a massive move to the upside, and we're going to see 200 by the end of the year. Now, first we need to complete this move to the downside. We need to close these gaps that we have here, these price imbalances, consolidate along the 200, and typically the 200 is where you see investors buy a stock. So it's the 200 moving average is where it's typically a good buy. And that would be a good buy area for AMD. And currently the price that is trading at as well, 154 to 148, is a great buy for AMD. So trading options, I'm going to be looking to fade AMD intraday for the next week or two until we get a push back to the upside, and until the 9 MA crosses back above the 20 MA, then that's when I'm going to be looking to go long and swing long. But as an investor, I would be looking to pick up a ton of shares here around 148 on AMD, because we do and we will have a 35% upside by the end of the year. Now, looking at Amazon, Amazon looks like it's forming decreasing size triangles. It's forming a wedge here. So again, today is June 20th if you're watching the video. And what we're going to see is Amazon tighten up here. We have the 9 trading above the 20 above the 50 above the 100, and the 200. So we have MAs finally in order, and we're tightening up here in terms of price action. We're bouncing off of a long-term trend line. This trend line, if you draw it back, it goes all the way back to January of 2023. So that trend line comes all the way back here to January if I was to draw the trend line. Let me actually draw that for you now. There is a trend line overshoot over here from October of 2023, but this trend line, if we draw it back, it goes all the way back to January of 2023, and it holds pretty nicely. Like I said, there is a trend line overshoot here that reacted off of news in October, but then we reclaimed immediately the next day. So this trend line has been respected pretty nicely the entire time. We've been bouncing off of this trend line. I think we may get one more bounce here, June 20th to June 21st-ish. We may get one more move to the downside, a bounce, or we might just tighten up. But once we do, we're going to squeeze right out of this wedge and make our move to 200. So a lot of these stocks are trading in the hundreds, the high hundreds, and they're going to be moving to 200. It's just a psychological level, and it just kind of makes sense with a lot of these stocks. And this is the case as well for ARM. So ARM is going to be seeing 200. ARM is currently breaking out. It's been holding this tight upward channel for quite a bit now, since the beginning of May, end of April, been moving to the upside, and we finally broke out from these highs. Now, one thing to keep in mind is that ARM is has a lockup. So there's 90% of ARM's stocks, its shares are locked up. So the few shares that are on the market are going to be pushing up. So it's going to just create more demand, pushing these prices up higher and higher. So ARM can really squeeze out of here up to 200 pretty quickly. And I mentioned last week on a couple videos and on my TikTok that if we get above this high here, we're going to be ripping. In that day, once we cleared 164, we absolutely ripped to 174 pretty quickly. So ARM is going to be seeing 200 very soon, if not by end of summer. Now, Microsoft created this inverse head and shoulders. Microsoft is going to be seeing 474, and I think that's going to be seen before August 15th. So before August 15th, we'll see 474.79. Microsoft is also breaking out from these levels here, this 433, these highs. And it, like I said, it made a pretty ugly inverse head and shoulders, but nonetheless, it's an inverse head and shoulders, and it's going to make this measured move. So the measured move is from the head, and we look here from the break of the neckline. So it should be moving all the way up to about 474 to 476-ish. So that's what we're looking for with Microsoft by August. In terms of Tesla, Tesla's going to be making a massive rip to the upside here. Tesla's been consolidating for quite a while, so price is really balanced here. We dipped right here before we made a rip to the upside. If we get above this 187, 188 level, Tesla's going to fly. And when it does, it's going to move up to about 226. In my opinion, we're going to see it rip to 226 and reject off of this long time downward trend line. But it will make that move. Once it gets above 188, it's flying. So that's something to be on the lookout for. Now, NVIDIA. A lot of people have been asking me about NVIDIA and where NVIDIA is going. So NVIDIA is in this tight upward channel. This line here is where a lot of people were trying to fade NVIDIA. A lot of people were buying shorts, and they were getting killed on their shorts. Why did they buy shorts? Well, they don't know how a stock split works. So NVIDIA was trading NVIDIA was trading at $1,100, and then it had a stock split, okay, which got it down to about 118. And when it did the stock split, there's a ton of people in the markets right now who just don't understand the markets or stock splits or anything. So a lot of people were chattering on Twitter like, hey, this is the best time to short, trying to short NVIDIA. NVIDIA was not budging. Okay. And eventually, after this consolidation, after the stock split, we got a massive move to the upside. And these shorts got squeezed out of their positions. Okay. And then the calls, we're also getting these calls pushing these prices up as well. But we're in a pretty tight channel here. And when we're moving in a tight upward channel, we typically continue to trend in that direction until we have a break of the trend line. And we're currently in the bottom half of the channel, so we have a lot of room to the upside, to at least 150 by the end of June, early July. And then by the end of the year, we're going to be seeing 200 at a minimum. I think even by August, we'll see 200 on NVIDIA. Now, Apple has room to retrace here. We'll see Apple do a nasty retracement. It usually does after breakouts. It'll do a nasty retracement. It'll consolidate for quite a while, and then it'll be making its move up to about 240 by August to September, potentially end of year. Apple typically takes a little while, but it's been making a lot of advancements. And once we see the iPhone come out actually in September, we could see a bigger move. But until then, we'll probably move to the downside just a little bit before earnings at the end of July, and then kind of consolidate, then make another break after the iPhone comes out. Now, another stock that is on the up and up, SMCI finished accumulation down here, and I said it was going to rip, and now it's ripping. So it is absolutely on a tear. It was at 760. Now it is trading at 920. we're going to see SMCI up near 975 June 20th. And then after that, by August, end of summer, we're going to see SMCI near 1100 to 1200. And we might even see it eclipse 1000 before June 25th. So that is something to be on the lookout with SMCI. GameStop. A lot of people are talking about GameStop. So GameStop is holding on to dear life here. Today's June 19th again. GameStop's holding on to dear life. On support right here, pretty much live support, 2470. GameStop is a hype play, so it only moves if Roaring Kitty says something or if there's some crazy news. Currently, no news. We're going to see this go sideways. If Roaring Kitty says something or if there's some news, just know buying the stock, it's low risk down to about this wick here. So right down to about 2279 would be my stop loss if I'm holding this stock, but it's very low risk, or very low risk play. Having that stop loss at 2279 would be pretty nice. If you're trading options, do not trade options. Do not hold these options. The implied volatility is 300%, which is not good. If you guys know, I always say you need to trade with an implied volatility of less than 50%. So that's something to be on the lookout for. These options, do not trade them. Do not hold them. If you're going to be trading options, this is not financial advice, by the way, but if you're going to be trading options, then trade them intraday, only when there's news and when it's in the direction of the trend. That's it. All right. But in terms of holding these stocks, it's really not that risky. It's only 20 bucks a stock, like a share, 20 bucks a share. So like, not really risky at all. But then your stop loss should be right there at 2279 if you're smart, if you know anything. But yeah, low risk if you're purchasing shares here. We're at a low. Once there's some news announced, if there is, then it's going to rip. But if there's no news for quite a while, it's going to consolidate along this line for a little bit, and then it's going to fall below 2279. But if it doesn't, then you're safe. This stock is chilling. It's pretty much chilling. So a lot of people were asking me about GameStop, like, oh, should I get it? I'm not a financial advisor, but the smart move is just, get it right here at the lows. Get it at the lows. If it breaks below 2279, you're out. You're golden. You're out with like a 1%, like a 4% loss. Like it's nothing. So yeah. And then looking a little bit further ahead, we're looking at Netflix. Netflix is breaking out. This was the breakout box. It's breaking out. It's going to 700. Anything else? A lot of people want me to talk about QQQ. I don't care about QQQ. I care about SPY. But same story with QQQ. They're both ETFs ripping to the upside, making a measure move, and then they're going to retrace. They're going to make a mean reversion. So they're going to go back to the 20 MA on the daily time frame. So a lot of this that I just went over was on the daily time frame. So just be on the lookout for that. So that is all I have for you guys in terms of looking at taking a look ahead into the markets and where these stocks are going. The market's ripping, guys. The market wants to go up. Bond yields are down. Market goes up. That is just the way it works until we see a yield curve inversion. That's when you will get a recession. But we'll talk about that on another video. Until then, it's Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,